look at us being very efficient. We have just finished the Perth monthly market update, and we're jumping straight in to do the Melbourne one for our Melbourne BDMs. So just letting any listeners know that the reason why we do these is so that when your clients call up and ask whether they should sell or hold on to their property, you have a bit more understanding about what is going on in the market with the data, which is something that, we don't tend to specialize in. But I'm joined with Reese, who is amazing at actually explaining it in terms that I find really easy to interpret and to be able to explain to my clients as well. So I appreciate your time, Reese. Do you just do a quick intro for me, just about what you do, and then we'll get stuck into it.
Yep, thanks, Ash. So, I'm Reece Bettle, the Managing Director of Folio, which is a property investment firm, and also the Managing Director of PropStack, which is a data warehouse business, which will be with some of the data that we'll be talking about today.
Amazing. Let's get straight into it because Melbourne is a bit of a funny market, I understand. And the reason why for me I like to sort of know about it is because these days we have investors that do have properties all over Australia. So I think it's really important for BDMs to understand different markets and how they are performing, because also we can find that sometimes we can follow what potentially could be happening based on other locations. So I know you mentioned before that, Brisbane's probably a couple of years ahead of Perth. So sometimes we can look at that market and sort of make an assumption of what could be happening. And as well, when we have investors that do manage properties all over Australia, it's just good to know what they're experiencing, should they have a property that might not be performing as well in another state. So let's get straight into it, Reece.
Awesome. And you can see
Yep.
my Slido, okay?
Like a pro.
Good. It's good practice earlier. So yeah, Melbourne. Melbourne's an area. Look, we are a Perth and Melbourne-based business. So I'm based here in Perth. We've got an office in Richmond as well. So I'm over in Melbourne every month at the moment. And actually, from an investment standpoint, if we looked at the last quarter of last year, about 80% of our purchases were in Melbourne. So from a value and medium and long-term play, we actually see Melbourne as the best opportunity in Australia. And we are very much anti-speculative investing. So, high risk, high reward areas like regional plays, or, Darwin had the biggest growth in the last 12 months, but it was heavily driven by buyer's agent activity. Those sort of outer suburb house and land package areas, off the plan apartments, stuff like that, speculative lending, we don't like. Whereas Melbourne, you're looking at Melbourne being medium house price, less than Perth, Adelaide, and Brisbane, a major international city, will be the highest population. I think it might already be now they've included Melton in the data. We just see Melbourne as such an undervalued area at the moment, and it's a very interesting market. Just as Ash said there, it's you look at the core logic data, you look at the data that I'm going to go through today, and as a whole, it's out of recovery. So if you looked at 2024, it had 10 months of negative growth. So Melbourne was well and truly, it was no secret post-COVID, government really ruined, made some really bad decisions, and everyone was leaving. So, I personally, a lot of my Melbourne friends all moved up to Queensland, whether that's Sunshine Coast or Gold Coast, and a lot of people left and weren't returning to Melbourne. Whereas now, and I've got some slides here, we'll talk about some of the population growth, people are now starting to return to Melbourne, and actually people are seeing Melbourne as an affordability play to get in the market. A lot of clients, we do some stuff on the owner-occupier side of things as well, and a lot of the clients we've been helping from owner-occupier Melbourne are actually people that are migrating interstate, and they're seeing that there's an opportunity there. So Melbourne is particularly undervalued at the moment. And you look at this year, so I mentioned 2024, we had 9 months of negative growth. This year, since February, every month had incremental growth. So it was very small. So there weren't, you weren't going to see 2.5% or even 1.5% per month like any area, say Perth or Adelaide or Brisbane that we're experiencing. But generally, at the start of the cycle, what you want to see is the green shoots. So just incremental growth each month. And that's what we saw in Melbourne last year. You look at it as a whole, I think Melbourne did about 4.5% growth for the year, which when you're comparing it to your Perths, your Adelaides, your Brisbanes, your Darwins to some extent that are pushing near 20%, you think, oh, is that underperforming? But actually, Melbourne was kind of neck and neck with Sydney for growth. And because it's the start of the cycle, that's generally what happens when you look at the overall data. Now, why Melbourne's an interesting market? Because it's at the start of its cycle, there's actually sub-markets appearing. So at the start of the cycle, there'll be certain areas that will see the growth first. So the big ones at the moment are owner-occupied areas with good infrastructure, good amenities. Melbourne's very much a city that needs to have clear accessibility via public transport or by car into the CBD. Those sorts of areas, so a lot of areas in the southeast. So if you looked at the biggest growth area in Melbourne was Frankston, down there on the coast, sort of in the southeast. A lot of the value play and a lot when we were acquiring properties in Melbourne in 2025 was in that inner city, inner north, inner southeast, but also where the infrastructure is probably a bit ahead in the southeast, and there's not an abundance of land available like an area like your Meltons or your out west. So areas like that did really well in Melbourne. So, I mentioned there as a whole, Melbourne probably only done about 4% growth for the year. But if you look at somewhere like a Frankston, some of the suburbs we're buying within that LGA will be doing sort of 15% growth for the year. So that's generally what happens at the start of a market. This graph here can kind of see, from a median house price and a unit perspective, where you can clearly see, post-COVID, the stagnation. Melbourne actually, if you looked at it over the last 25 years, Melbourne was the most consistent market up until COVID. And what I mean by that is Sydney, I'll use Sydney as an example. Sydney, although it feels like it's been on a run for the last 20 years, Sydney has very much sharp increases and some stagnation periods. Perth's the most extreme version. Perth has sharp increases and long stagnation periods, whereas Melbourne was just consistently growing over the last 20 years. And it wasn't until COVID where you really saw, the stagnation there. But what we're starting to see is, rather than it dipping down, it's starting to increase. And you'll start to see over the next 12 months. These graphs are about 2.5 months behind. So then if you're looking at the data, looking at the results that we saw for Q4 last year, you'll see a slight uptick on houses and units. So Melbourne's definitely out of its recovery mode. So in terms of predictions for 2026, Melbourne won't be the best performer in the country. It probably won't even be in the top 3 or top 4. But medium to long-term play, so medium to long-term hold position, which, for a lot of our investors, that's what they want. People aren't really, a get in quick and trade out type of strategies, and really the type of client that we want to support. We want to support long-term portfolio growth. This is the best value play. So that's one of
that's really good to know that's more of a long-term hold. I'm curious as to whether the people that are investing in Melbourne, do they tend to be local people? Because I can't imagine you'd be getting that many people from Perth wanting to invest in Melbourne.
Yeah, it's probably the opposite, actually. So we found the same thing when we're buying in our Perth window, when we're buying in Perth heavily. Generally, people in Melbourne have been burnt over the last 5 years. So if you think about this, right, it's complete opposite for people in Perth. If you bought your principal place anywhere around here, you've lost, your house is probably maybe negative equity, or you've at least, it's not worth what you paid. So even if you had capacity there, for us to say the best value play is Melbourne, mentally that client's going to be like, well, my property's gone backwards over the last 5 years. I really can't see that. So actually, I would say rarely would we have a Melbourne client at the start of the cycle. Once if we're having this conversation 18 months time, when the data's showing it's like more of an increase like this, then we'll start seeing the Melbourne people come on board. But just naturally, if you've experienced with your own principal place some negative growth, a lot of these people might have sold investment properties. And we do chat with a lot of Melbourne people where they sold around here, so they didn't have the ability to ride out the cycle, and they sold at a loss. So getting into Melbourne's a bit of a tough sell for them. But where our most popular clients, to be fair, from Melbourne is Perth, actually, because
Yeah.
everyone in Perth has made, if they bought in the last 5 years, it's like the complete opposite to this. It's gone up, so everyone's made money and they've got equity. And a lot of people, it's their first investment. They want something that's a good blue chip asset that can just sit there and appreciate. So that's why Perth's up there, and Sydney as well. Like, I think it's definitely very interesting when we're talking to potential investors. The mindset or the type of person in Sydney that we're dealing with versus everywhere else is completely different. So Sydney, obviously, for the last 25 years has had some growth, and because it's so unaffordable now, a lot of the people that have property in Sydney are investors. You've got everyday people that have 4 or 5 investment properties, and it just seems like the norm in Sydney. So they're very open to, and those people have been in borderless investing. So they've been investing outside their backyard for years because they haven't been able to afford it. So they've probably bought in Adelaide during the peak of their cycle, bought in Brisbane, rode that out, bought in Perth. So those clients are very well educated that I can invest outside my backyard. Yes, I've made money in these other markets. So if the data's telling me it's Melbourne, then that's where we'll invest. So I'd say probably from a Melbourne perspective at the moment, Perth and Sydney clients are probably the most popular for that region. What you will see, though, is, like I said, once you start seeing more growth and the data start, it's almost when mid to end of the cycle is when locals will then want to get involved because they've seen the value increase in their current place or maybe their current investments. And now they're ready to trust the data, where it's a bit of a tough sell right now because they've probably had 4 or 5 years of at best stagnation, but in a lot of cases, negative growth.
So, 2 things here. The first one, Rachel's just popped into the chat to say definitely a challenge in Melbourne market for early investors. Mature investors from Sydney in particular seem very keen on our market though, and anything under 1 mil seems to be on the shopping list. So that's exactly what you were saying. And the second thing I was just going to mention is, very similar to Perth, where we had the interstate investors buying, the local investors weren't buying because they weren't interested in buying in the areas that the interstate investors were. But then now we've seen the local investors come into the market. It seems to give it that second wind. And I wonder if that'll be the same with Melbourne, where you've got that consistent growth, you've got the interstate, and then, like you said, as soon as the locals get confident with that growth, then you get a second win in the market. Like, are we finding that second wind does happen naturally?
Yeah, so I mean, you saw. Let's use Perth as an example because that was the most recent market to go on an increased upward cycle. I'd say, and we've probably spoken about this before, Ash, I'd say the last 12 months, the majority of the investors have been Perth investors, not interstate, but the first two years was all interstate. And that's kind of what you're going to see with Melbourne. Like, I think it'll probably take, at least 12 to 18 months before you start seeing Melburnians, I guess, confident to invest in their backyard. And the reason you see the interstate people come first is they know what they've just sold their investment property for, or they're in their local area. Like, I'll give you an example, right? Like, obviously, I go to Melbourne quite a lot, based in Perth. The types of assets that I see in Perth. So I even think a unit play in Melbourne is a really good value play, especially those smaller complexes, townhouse villas. There's one in Bayside, I think, at 800, 820, right? Similar area in Perth would be 1.1, 1.2. So from an investor, if I put my investor hat on, just clearly, and this is what we were talking about this on the previous one for the Perth one, about the beaches and the interstate people coming over to Perth and seeing how cheap properties are so close to the beach. Same thing with, if you're living in Perth now for Melbourne, you're seeing Melbourne's an international city, much larger city, really vibrant CBD compared to Perth. I've got an asset type that's 200-300 grand cheaper in Melbourne than what a comparable asset is in Perth. So that's just a Perth example. Imagine people from Sydney where, they're even further down the track. That's why they're seeing value in an area like Melbourne. So, I think the data, it'll probably take a while for the Melbourne investors to come back. This year, it'll see some growth, not crazy again. I think it'll be definitely like what I mentioned earlier, what we saw last year, where we'll probably only do 5 or 6% growth this year as a whole. But the sub markets, so the good owner occupier appeal that are good to the good infrastructure, where the best schools are, they're going to see some serious growth. It's once we start to get a bit of momentum, that's when you'll start to see some of those other areas become a good play purely from affordability play. So it'd be an interesting one to watch this year, and I think this graph here kind of shows you, looking back the last 20 years, this is an indicator. We mentioned this on the Perth one, with Perth being at historical low listings, but we're seeing a downwards trend in stock on market. So what that does is stock on market is decreasing, so there's less supply there. It starts to increase the demand as well, and we've got vacancy rates at sort of 20-year lows in Melbourne at the moment, and rents are increasing at a rapid rate as well. So I think what you can clearly see is once we start to see like a dip in the stock on market, the house prices start to go up. So there's obviously lesser supply there, creates more of a demand. So this is dropping pretty significantly. So this is a figure that we keep a close eye on for Melbourne. And then in terms of kind of affordability, so you're looking at Melbourne, medium house price below Perth, Adelaide, Brisbane, and Sydney, of course. So from a medium house price perspective, Melbourne, as a big international city, is more affordable than those other major capital cities. Now, this is the affordability index. So what this is your medium household income. How much of that do you use to pay for the medium household mortgage? So you can see kind of from a affordability standpoint, Melbourne, I think at its peak was around sort of 48%. We sort of hit towards those peak sort of around 22, 23. But now what you're starting to see, and a lot of that increase would come, there's two reasons why you can see an increase. One, house prices are going to go up, so your mortgage repayment's going to go up, so that's going to affect the affordability index. But also interest rates as well. So if you think about a couple of years ago, the interest rates being a bit higher, it's going to make the mortgage repayment a little bit higher as well. So what we're starting to see is now a downward trend on the affordability index. One is because property prices stayed stagnant in Melbourne for the last 4 or 5 years. And then two, last year we saw, I think, 3 cash rate decreases. So this is a positive sign. This is a positive sign in terms of the affordability play. And what you can see here as well, so the blue line is houses, the yellow line is units. And why we see this like a fair bit of value in units in Melbourne as well is because this, and Ash would have heard me say this in a similar graphs that I was pointing out in Perth, but if you look at the trajectory of these graphs over the last 25 years, they've been pretty consistent in terms of how much people are willing to spend on their mortgage for a house, how much they're willing to spend on a unit. And what we've now seen is there's a big disparity there between houses and units. So absolutely, we suspect houses to have a really good year in Melbourne in terms of these sub-markets, but also from a value play, an affordability play, there's some really good value there from a units perspective. And you're going to look at from an affordability standpoint, it's starting to, both are starting to trend down. But you'd like to, looking at the data, you'd probably see it looking more of like a similar gap to like what we've seen over the last sort of 20, 25 years.
And in the Perth market, when you talk about units, you are generally, you generally prefer to purchase under the 10 lot ones. Is that the same rule for Melbourne?
100%.
Yeah,
absolutely. So I think it's probably well known, those Melbourne apartments that have just gone underwater because there's too much supply in the inner city. We, from an investment standpoint, we'd stand clear of those. When we're talking units, we're exactly what you said, Ash. We're looking at ideally, especially now, for so just give an example with our business at the moment, the units we're buying in Melbourne are going to be your townhouses, your villas. Once they start to become unaffordable, we'll then look at complexes no bigger than 10. Depending on how competitive the cycle is, you can potentially go up to 20, but nothing larger than that. But now's a good time at the start of the cycle where there's a really good value play in some really sought after suburbs from a villa and a townhouse perspective as well.
Cool.
Cool. This one here is the medium rents versus the house price. So this is probably a big indicator from an investor standpoint. Looking at the annual figures, I knew it was increasing, but I was quite shocked to see that Melbourne actually has better yields than Brisbane and Adelaide now as a medium for houses. So you can clearly see, post-COVID, because investors left the market, there's less investor stock on the market, so rents are starting to rise. I'm sure a lot of people on this call could speak better to what the market's done over the last couple of years than myself. But basically looking at investors leaving the market post-COVID when everyone was leaving, it's then increased the rents because there's a lack of supply there as well. So what you're seeing now is, you're looking at the last sort of 25 years history. We're an all-time high for the medium rents in Melbourne, and it's starting to now stabilise, and you'll probably see over the next 12 months that start to flatten. And what that's meaning is because more investors are starting into the market, there's more of a supply. So it's really going to slow down the rental demand a little bit as well. So I thought that was a pretty powerful one when you are trying to show Melbourne, especially from a rental or a yield perspective. Melbourne has historically or typically had lower yields than most places due to the lack of new supply in the inner city. However, what we are now starting to see is, with the property prices now starting to get a bit more stabilization, property prices now starting to get a bit more increase increments there. We'll start to see the rents start to stabilise, but we've clearly seen a huge uplift. And looking at the data from last year, like I said, Melbourne yields now better than sort of Adelaide and Brisbane, so that'll start to attract more investors, and especially like I was mentioned before, you start looking at investors like experienced investors out of Sydney. Yields are going to be an important player to growing on their portfolio as well. Cool. This one here is the so I mentioned, so the big thing was post-COVID. So this is a pretty powerful one. So the yellow one here, I can appreciate this is a bit of a busy slide. The yellow line here is population growth for Melbourne. So you can clearly see COVID, everyone left. You can't, in terms of the graph, you can't see a more significant drop out of any of the other capital cities. So you can clearly see people were leaving the country, leaving the state. And that's subsequently, once we saw this long stagnation period of the house prices, or actually the decline of house prices. But as we've sort of entered out of the last couple of years, we're now starting to see that increase. And actually, this is percentage of population growth. Now, Melbourne's number 2, Perth's number 1. But the important thing to note, this is percentage. So Melbourne having a much bigger population in terms of people arriving, there's a hell of a lot more people arriving to Melbourne than what they are in Perth. Where we're seeing a lot of this, interstate migrations has kind of flipped. Everyone was leaving; they're now starting to come back. It's not fully into the positive at the moment, but now overseas migration, we're seeing a lot of an increase from an overseas migration to Melbourne. So if you think about it, Melbourne and Sydney are the 2 international cities of Australia. So when migrants are looking to immigrate, they're the 2 they're looking at. And you're looking at, I'll just show you here, actually. You're looking at an affordability index, so to how much your salary needs to be on a house. You got Sydney all the way up here, with Melbourne, second cheapest behind Perth. So if you're an international, if you're coming internationally and you want to migrate, Melbourne's now proving there's same opportunities there is in Perth from an employment perspective, and now you're actually starting to see, well, from an affordability play, I can actually enter the property market in Melbourne, where Sydney I'd be struggling to enter the market.
So basically, if you're coming from overseas and you're coming over to Australia, you'd be wanting to include a housing package in your new employment contract if you're moving to Sydney.
100%. And I think it's like you're looking at, because Sydney's just getting spread so far. Like I was looking at the top 10 growth areas in Sydney, and they're all in the west, which is they're pushing everyone out in the west. So because it's so unaffordable in that inner ring, and I think that's the one thing I would say from an investor standpoint, we are seeing a lot of, and you get this at the start of a cycle, and you get this when there's a bit of sentiment, like people are starting to talk positively on Melbourne now, depending on if you're in Melbourne, you're outside of Melbourne. What you do get at these markets, and I mentioned before, this was really important on Melbourne. Melbourne is because it's the start of a cycle, not everywhere is outperforming. And the concern I do have is there's a lot of these investor groups pitching a lot of the outer suburb house and land package areas where there's an abundance of land, and they're actually selling 60, 70% of the estate to investors. So, in 12, 18 months when those properties are built, they're relying on 60, 70% of those estates to be filled by investors, which just isn't the case. So that's probably the one thing that we're starting to see a lot of these groups, and we've got a podcast. We've actually been calling them out a fair bit on the podcast as well, just to raise a bit of awareness. But a lot of people are pushing, these East Coast investors, mum and dad investors, especially people accessing their self-managed super funds, to these outer suburb areas, which at this point in the cycle, you're not going to see the growth what you would in the owner-occupier appeals. I think later on in the cycle, once they become affordable, they'll be, from an investment play, will be there may be some moves people can make there, but definitely at the start of its cycle, and definitely as us as kind of probably boring blue chip investors, we'd really want to be looking at that the good owner occupied appeal. So I guess in terms of like the next 12 months, like I was saying earlier, I don't think Melbourne's going to outperform your Perths of the world, your Brisbanes or your Adelaides, but what you will see is still consistent growth, which is what you want to see at the start of a cycle. You'll see sub-markets appear. So, like I was mentioning, Frankston did up to 15% growth this year. There'll be other areas that will do similar growth like that this year. But once they start to get momentum and more people start entering the market, the first homeowner, no LMI cap up to 950s helped drive a bit of volume in the market towards the back end of last year. I think we'll see a bit more positivity, but it's definitely a medium to long-term play. So as I mentioned, from an investment side, our business is probably gearing towards the 70 to 80% of our acquisitions being in Melbourne, but we are very much telling our investors, it's not going to be about that short-term growth. This is a medium to long-term play, because for some people, it could be the only time in your lifetime where you have the opportunity to buy these types of blue chip assets in Melbourne from an affordability standpoint. So definitely a market we like. But in terms of that growth over the next 12 months, I think that it won't outperform some of these other regions, but medium to long-term play, the fundamentals of Melbourne are shaping up nicely.
Amazing. And an ideal budget for Melbourne, if I was looking to buy there, what would I need to have? What would be a healthy budget to have?
Yeah, absolutely.
For more of the unit side of things, like the villas and townhouses.
Yeah, absolutely. So I'll tell you both. So, and it's moved since we've started buying. We've been buying the last 6 months there. And initially, we started off saying you can get a house like in a good investment grade area for 800. That's now pushed to 850, I would say. For a unit, you're looking, entry price for a good unit around 700. We're still seeing some value, and some value plays around 650 as well. But yeah, I think if from an investment standpoint, you're looking at probably 700 for a unit, 850 for a house is going to get good stock. There's definitely cheaper options there, but in terms of the fundamentals that we look at for long-term compounding growth rates, they're going to be kind of your entry point. So I'd say a lot of our investors that we're sending to Melbourne initially wanted the houses, but then once we start going through some of the data on units and some of those slides I showed you earlier where the gap's never been so big, and they can see it's a much more affordable price point, and they're getting in a really blue chip suburb, 6-7 Ks from the CBD, they're choosing those unit options as well.
Amazing. Thank you. I appreciate your time. It's always great insight. You've got me thinking about the Melbourne market, so I will speak to my mortgage broker. Oh, beautiful. I've just had a message. Best half hour I've spent on Melbourne growth trends in a long time. Amazing. Thank you. So I'll have this as a replay available for anyone. So if someone is only just listening to this as a replay, I will. So Reese is hosting these each month for the next 6 months for me. So it's just a great opportunity just to understand the data a little bit better because as BDMs we don't really have access to that. So thank you to anyone joining us or listening. Thank you, Reese, for your time, and we'll see you next month.
Awesome. Thanks, Ash. Thanks for having me.